Our stocks headed for a Black Monday style stock market crash. We saw on Friday, SMH about to break through this lower level. And we look at the heat map from Friday, it was nothing more than a sea of red. However, I have a 100% stat that I'm also going to share with you guys in today's video. Now, we come over and look at the QQQs real quick. We closed the gap. We violated the swing point right here. And now we are fast approaching the swing low out here from earlier this month. So is the Qs heading for this double top target all the way down here towards 458. Now on Friday, we learned from the Atlanta Fed, their latest estimate for quarter one growth is minus 2.8%. We continue to see more and more deterioration in the economic data. Then we look at the fear and greed index. Once again, we are back into extreme fear. If we basically look all year long, we have been below 50 on the fear and greed index. Only 3 times going back since the middle of December have we seen the fear and greed index actually even be able to tick over into neutral. Then we look at the most recent investor sentiment survey. Once again, not very bullish out there, 27.4. However, it has come up substantially. But if we look at the historical average for the bulls, is roughly 37.5. So you can see we are roughly 10 points behind what the historical average is. As we come over and look at the SPY real quick, notice the SPY is also getting very close towards this lower price level. When we come over and look at advancing issues versus declining issues on Friday, it was overwhelmingly to the bearish side. We had 78.2% of issues declining on Friday. And is it about to get worse as we are getting closer and closer to April 2nd, Liberation Day? Now, what if all this talks about tariffs and such is nothing more than a major stock market trap? Meaning we go ahead, we flush the lows, maybe even coming over and hitting the targets off the weekly chart on the SPY down here at 536, top number 1, top number 2, and keep in mind on the weekly chart on the SPY, the MACD is still extremely bearish. So can this be nothing more than a flush, get everybody panicked, freaking out saying, oh my goodness, let's go ahead, sell, and then they go ahead and rip it right back up. Because if we look at the volatility index on Friday, we noticed the VIX had a sharp rise on the way up. And on Friday, the VIX was up 15.95%. Whenever the VIX is up more than 10%, it basically indicates that either within the next 1 to 2 days, highly probable we're going to have an update in the market. And that would kind of go along with the theme of this next story. Stocks on pace for the worst month since 2022. Could April bring buying opportunities? Now, historically, April tends to be a very bullish month for the market. So do we see a little bit of weakness as the tariffs are unleashed? And then it ends up being nothing more than a major trap. That could be the case. However, we also got to be mindful that maybe, just maybe, we're going to see a more sustained downturn. Stocks fall sharply to end the week. Inflation fears are back in the spotlight, and that's really the problem. It's really the stagflation fears. The lower economic growth with higher inflation is a recipe for disaster. Now, I can't think of any time in history when we've been in a recession and we've seen the stock market actually thriving. We've seen a lot of the heavy hitters out there really starting to give it up. Look at the SMH about to break through this swing low. We take a look at the king of AI, NVIDIA, rolling over, looking like it may want to challenge this low here and maybe give it up and go lower. NVIDIA has been having a hard time being able to get above this anchored VWAP, going all the way back to January 7th. We even come over and look at Meta. Meta looks like it's on the verge of trying to break below the swing low. We take a look at Microsoft. It looks like right there getting ready to break and go lower once again. And if we go ahead and cycle through a lot of different stocks out there, you're going to see a lot of them have this very similar pattern out here. Then we come over and look at the dollar index. Dollar index started to roll over on Friday, and we also seen the 10-year start to go lower as well. However, could the 10-year actually going lower be nothing more than a warning sign, meaning that investors are getting concerned, saying, uh-oh, let me go ahead and jump into safety. I just want to make sure my money is going to be safe. I don't care if I make any return on that money. Now, before we take a look at that 100% stat, I want to let you guys know right now, Apex having an 80% sale off all their evaluation accounts. My Fund and Futures get 10% off. Step 1 or Step 2 evals. Tradeify, get 35% off any 50K account size. And Take Profit Trader, 30% off all their evaluation accounts and no activation fee. To make sure you get the best deal out there with these 4 prop firms, use the link in the description box down below. Now, let's talk about the first stat I want to share with you guys. And this stat's brought to you by Almanac Trader. And basically what this stat is going to go on to show us is the last trading day of quarter one, tends to shine for small caps. However, it does not bode so well for the Dow Jones. For instance, going back to 1990 to the current time, we have only been up 40% of the time in the Dow. S&P 500 has only been up 45.7% of the time. The NASDAQ fares a little bit better. It's been up 57.1% of the time in this small cap. So Russell 2000 has been up 74.3% of the time. So if the Russell is going to shine like that stat shows, the Russell is further away from the low than what we saw with the NASDAQ, but it's kind of relatively in that same ballpark that we saw with the SPY earlier. Now, if the indices do start to flush this recent low that we had out here in March, is that going to set up some type of MACD divergence? Now, let's come over and look at this other stat where this stat has been 100%. And that's going to be when January was greater than 2%. We take a look at the S&P performance in April. And the stat I want to share with you guys is, notice we have been up 29 times, only down 4. Yes, that's not 100%. But then look, whenever we had a 2% move, and that could be 2% up or 2% down, 18 times we've had 2% moves. They have all been to the upside in the month of April when January was greater than 2%. So we'll see, is this April going to go ahead and finally bust that stat? Let me know your thoughts in the comment section down below. Now, if we come over and look at the yield curve, the 10-year versus the 2-year, once again, we're almost back up here at the yearly highs. Are we going to start to see a steepening of the yield curve? And if we do, this is going to be problematic for the stock market. When we see the steepening of the yield curve, that's when bad things happen in the stock market. Then we come over and look at the Dow Jones versus the transportation index. We've been talking about this. Look at when we had the double top up here on the transports. You can see we clearly had huge divergence in correlations with the transportation index, and the transportation index still trying to go lower. Then we come over and look at the HYG, high yield bonds, versus SPY. As the SPY is coming down towards this lower swing point, we continue to see deterioration in the high yield bonds. Again, this is another warning sign that things are not nearly as good. And that's exactly why we haven't seen the buy the dip mentality as of recently. Now, Friday on the live stream, when we're looking at the S&P 500 and we're looking at the NASDAQ, we kept talking about how we could not get a bounce. Yes, the market was due for a bounce. And I kept warning traders, whenever we set a trend on Friday, if that trend is intact after lunchtime, they're going to continue to push it in that direction even after the close. And that's exactly what happened out here. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. This week, we're going to be giving away more Take Profit Trader accounts. So if you want a chance to win, make sure you join us on the live stream. But now, as we come back over and look at the QQQs on the weekly chart, we talked about this a little bit earlier where we had that 458.78 double top target. That would be top number 1, top number 2. And the simple way to go ahead and measure for that target, we can grab our Fibonacci extension tool, measure from the highest peak down to the valley, and then just double click on it and it'll give us a price completion right down there. Then we look at the MACD indicator on the weekly chart, still looks horrible at this moment, a nasty bearish cross. Now we are getting down towards that zero line, but then as we come over and start looking at the daily chart, notice price is very close near this low, and now we're below the anchor VWAP from all the way up here, and if we look at the anchor VWAP from the recent low, we are also below that anchored VWAP. That is going to be problematic out here for it. Is this going to go ahead and give us a break and continuation lower? Do we set up some type of MACD divergence as we start breaking through that low? Sunday night's open, the futures markets could get dicey. On the 4-hour chart, this is something I was warning you guys about before over the last several days. And that is whenever the MACD indicator gets towards the zero line and we're still in these lower levels, watch out. That could be nothing more than a recharge point for another leg lower. And here we are. We are right there near the lows. Now, it did give a little fake out because we had this little consolidation. We had to break up, but then once we got back into this range, I was a little bit suspect of that move on the way up. Then as we come over and start looking at the 30-minute chart, notice on the 30-minute chart, the MACD indicator is just about to cross to the upside. So could we get a bounce? We most certainly could. And some of the targets, if we get a nice juicy bounce out here, would be a massive gap down that we had from Friday. Can we make it all the way up and fill the gap? Now, if you're looking for a bounce, I would not want this to be my primary target. Instead, my primary target would probably be right near this high volume node right up here, about 472.61. As we come over and look at the futures markets real quick, Notice on the 4-hour chart, this is absolutely ugly. This is horrible, horrible, horrible if you want to be bullish the market. However, we have a pattern that's setting up a volume profile pattern. Notice we close way outside of value. Value area low coming about 19,836.00. We have the weekly point of control right up here at 20,080.00. And then value area high will be about 20,410.00. Now, normally, whenever we close outside of value, and this is regardless if it's a daily chart or a weekly chart in this example, the rule behind that is normally within the next 1 to 2 trading sessions, if we're dealing with weekly profiles, a session would be determined as 1 week in time. So then the next 1 to 2 weeks, highly probable we come back and visit value area low. However, something I want to warn you guys about, whenever we close way far outside of value, then a lot of times it's a little bit more problematic and we could leave that level left behind for quite some time. Notice from the closing price all the way up to the value area low, that is 468 points away from the closing price. That is massive out here. The range last week, 1,169 points. So one thing I want to watch out here for is I really want to watch the swing low that came in right down here on the futures markets, 19,344. Do we flush it and do we stay below it? If we just simply flush below it and we start getting back above that low, then I'd actually want to turn bullish the market. Now, the market is overdue for a bounce. Can we maybe bounce back up here towards this high volume area at about 19,680 and then start to turn down once again, maybe set up another A to B equals C to D pattern? As we come over and look at the daily charts real quick, notice what do we got going on? We're closing slightly below value area low, and that's going to come in at a price point of 19,382.50. We're going to have the point of control. This will be an untested point of control, and this is going to be important. This is going to be 2 consecutive untested point of controls. That comes in at 19,460.00. We have the untested point of control from Thursday that was left behind, and now we have the one from Friday. Now, if we do get a situation where we end up getting 3 stacked untested point of controls, that's going to get very interesting, especially with what we have coming up with tariffs on April 2nd. Now, we have value area high up here about 19,722.5. Now, some of the areas we want to focus on this week, if we start to get a bounce. So if we start getting above value area low, I want to target that point of control. But I also want to target some of these minus development areas in the profile, somewhere around 19,535, and then right up here towards 19,664, and then this whole zone, anywhere from value area high all the way up here to about 19,829. Now, the 829 is also very close towards that structure breakdown point that we had, which is something we talk about quite often on the live streams. Now, is Jay Powell about to spill the beans and let us know the Fed is about to support the economy? We look right here on Friday. What do we see? We had the core PCE price index, which is the Fed's preferred measure of inflation, showing that once again, inflation is on the rise. But then we come over and look at what is the economic news out here for this week. We really have nothing out here on Monday to contend with for the U.S. news. On Tuesday, if we come over and look at Tuesday, 9:45, we have final manufacturing PMI. We have the ISM manufacturing PMI. We have the JOLTS job openings. We have ISM manufacturing prices. Then on Wednesday, we get the ADP non-farm employment change. Then on Thursday, we get the weekly unemployment claims, ISM services PMI. And then Friday, oh boy, we have the average hourly earnings. We have the non-farm employment change. We have the unemployment rate, but who is out there at 11:25? Mr. Powell himself. Does he already know that we're going to have bad jobs numbers coming out? And he's going to come out here and basically assure us that the Fed has a dual mandate to make sure we have maximum employment with stable prices, and that the Fed is ready to use whatever tools necessary. Now, as we come over and look at the SPY real quick, notice we have that double top target down here at 536.76. If we look at the MACD indicator at the bottom, notice we have a very good separation of the two lines. They are showing no signs of weakening at this point. Then on the daily chart, MACD indicator is crossed to the upside. However, about to cross back down. And I do think we'll get that bearish cross, especially if the SPY comes all the way down here, breaking through the low. However, if we do flush the lows, is that going to set up some type of MACD divergence? That's most certainly something I want to pay attention to. Now, another outcome that could happen, maybe, just maybe, we don't hit that weekly target. maybe we come down here, we end up having a double bottom, and then we start to firm back up. Again, we need to see once we hit the swing point, what the market is going to do. Does it firm up or does it accelerate the sell off even lower? Then we come over, look at the 4-hour chart. We came right up towards the zero line on the MACD indicator. We started to roll right back over. And once we really got below the swing point over here, that really put all the way down here at these lows in jeopardy. Let's not forget, we had a gap from back there, and we're not that far away at this point from filling that gap. On the 30-minute chart, the MACD indicator, however, looks like it may want to cross to the upside. We look at the volume profile. You can see we have very poor market structure, very thin on the profile, basically inefficiencies in the market, along with a gap lower that we had on Friday. So do we start to get some type of bounce, or is this just a consolidation getting ready for another leg lower? If we do break below the lows from Friday, and then we start coming back up, I want to target the point of control. I want to target this minus development area about 557.75, and then maybe value area high. Anything above value area high, I'm going to classify this as a B as in boy shaped profile, and that would indicate that we're likely going to come all the way back up and explore the upper third of the range, and that would be somewhere around 563.84. However, with tariffs right around the corner, I don't know that that is going to be the likely outcome or not. Again, we need to trade what we see, not what we think. As we come over and we start looking at the 4-hour chart for the ES futures, notice we came all the way down towards this high volume node, and we had a 234 point range last week. Now we are not that far down from this low, and this has been quite a drop on the way down. Notice value area low off the weekly, 57.45. The current trading price is 56.02. We are miles away from value area low. But again, similar to what we talked about with the NASDAQ, we did close below value, and the rule behind that is expect a retest of that level either this week or next week. And again, we do have the catalyst this week, especially later on in the week, that could potentially bring the market back up towards that area. We also have the weekly point of control at 58.15.5, along with value area high up here at 58.36. Now, I'm not really concerned with these upper price targets, meaning the point of control or value area high on the weekly, unless we start getting above value area low. And right now we are miles away from that. Now, if you're just looking for a little bit of a bounce, notice, look at where any of these minus development areas are on the profile. These could be target locations. The first one's going to be down here at about 56.34. The next one would be about 56.43.5. And then anywhere from 56.66 all the way up here to about 57.11. That would still be quite a decent trade up, even if we're just setting up some type of ABC pattern on the way down. Now, there are a couple different ways we can measure the Fibonacci levels. If we go ahead and we pull from this leg right here, all the way down, you can see the 38% level would come right up here, starting to get into that minus development area. Now, if we pull the fib from the whole entire range from last week, notice the 38% retracement is still within that minus development area. But then if you look at the 61.8, that starts to get us right back up here near value area low. Jumping over and look at the daily profiles, notice going into the end of the day, after the market closed at 4, the market continued to sell lower. We closed below value area low, which really comes in at a price point of 5612.25. We have the point of control at 5624.75, with value area high being 5668.25. Now, there are some other minus development areas I would want to focus on. If we get above value area high, if we start getting above value area low, regardless if it's Sunday, Monday, whenever the case may be, I want to target that point of control. But then I want to try to push targets right up here to 56.43, and then maybe up here towards value area high, which is basically at the bottom of this whole minus development area, anywhere from value area high up here to about 56.99. Now, if you guys like to see which account size is best to trade with Take Profit Trader, not only for the evaluation phase, but also once you get funded, make sure to watch this next video right here.